All right. Good evening, everyone. This is Lori Charlton. It's November 21st, 2023. I want to welcome everyone to the quarterly meeting of the Board of Finance. I'll call the meeting to order and ask Mr. DeWitt to lead us in the Pledge of Allegiance. Okay, to the members of the public who've dialed in or joined us on the WebEx tonight, you are muted and will not be heard by board members, and there will be no live public comment until called for during the meeting. We will take live public comment related to agenda items 3 through 8, and I'll pause for comment prior to hearing item 3. Any members of the public who are joining us on WebEx and wish to provide comment, please include your name in the chat box now or in any time before item 3 is called. Members of the public who are here in person and wish to provide public comment, please raise your hand and you'll be recognized. Members of the public are always encouraged to send their comments and questions in writing to the board at bof@fairfieldct.org. And if you do so, please remember to include your name and address in the email. Before we move to the remainder of the agenda, I want to note that this is the last meeting of this board as it's currently constituted. We will have a new member, Amy Ruggiero, joining us at our next meeting on December 5th. And this meeting is the last for our colleague, Mr. Chris DeWitt. Chris is retiring from this board after 16 years of service. I know that everyone on this board understands how important Chris has been to the body and everything he's contributed. For members of the public who may not know, among other things, Chris has served as the chair of the Budget Committee for the last 13 years or so. He also chaired the Senior and Disabled Tax Relief Committee and was instrumental in doing the research and driving the enhancements in that program that were passed by this board a couple of years ago. And most recently, he chaired the Purchasing Policy Committee that produced the policy document that passed unanimously through this board after a multi-year effort. On a personal note, when I joined the board 4 years ago, it was just a couple of months before we all went into our bunkers when COVID hit. And Chris and I were the liaisons for our respective caucuses on that first crazy remote budget season. And we spent a lot of hours on the phone comparing notes and trading spreadsheets and debating and agreeing and disagreeing on issues. I found that Chris had strong points of view, but he was always open to conversation. He was always a gentleman. We were always able to approach issues in a spirit of mutual respect and disagree without ever being disagreeable, something I valued tremendously then and in the years since. And in this world of ours where disagreement is often automatically branded as partisanship, we need a lot more of that. So Chris, I want to thank you for bringing that style of collaboration to your work on this board. Thank you for your commitment to the town and for all your work over the years. I'm sure I can speak for everyone when I say we will truly miss you. And we have a small token of our appreciation that I will give you now.
I can't say too much. Thank you for the kind words, and thank you for everyone on this board. Thank you to my family for giving me up for 16 years in March, and I want to say thank you to all the chairmen or chair people that ran this board while I was on. Mr. Kiley, Mr. Flynn, and of course, Ms. Charlton. I appreciate all your leadership.
And Mr. Brown.
Sorry? Oh, and Jim Brown. Oh my gosh, sorry, Jim Brown. I apologize. Sorry, I'm not thinking right. Yeah, thank you. Thank you very much.
Thank you. All right, so is there any public comment on agenda items 3 through 8? Okay, seeing none. What's that? Oh, Jim.
Yes. Thank you, Madam Chairwoman. Obviously, we have a long agenda tonight. It's going to take a while to go through. But in reviewing it and understanding that this is the quarterly review meeting, and also understanding that for some reason it turned into anything but the quarterly review meeting over the last year or two, I think it would be appropriate if we handled some of the items like 9, 10, 11, and possibly even 12 earlier in the evening. There's some people, I think, like Mr. Bucco's probably on the phone here, and to get those people out of the way first. So that
Okay,
they could,
I'm just, and let me respond. The reason we're doing the voting items first is our colleague, Mr. Matola, needs to, he's got a hard stop, and we just wanted to make sure we provided the opportunity for the voting items prior to the others. And typically, yes, we would want to do the quarterly review piece first. I'm hopeful that these voting items are not terribly controversial and we can get through them relatively quickly, but that is the reason for the agenda.
all right, going forward, could we try to do that? I mean, it is a quarterly review
Yes.
meeting. That's the purpose of the meeting. And I have found in other meetings, we've kind of put them towards the end and let other people go first. And I just think that out of respect, especially for the pension board and for anybody from the finance department that is here to present, that we can just get them over. I thought it might be quicker tonight because it was the first quarterly review and it shouldn't be that long. So, okay.
Okay, thank you. So we're going to move to item 3. For anyone in the public following along, you might find the meeting backup to be confusing. It's not as easy to find on the Newtown website as it used to be. I will refer to page numbers, but for clarity, the document I'll refer to is posted in the Board of Finance section under Documents and Links, and then under Additional Documents, there is a link called Original and Additional Backup. It is a 330-page PDF. That is the full set of backup for the meeting. It's in the order of the agenda. So as I refer to page numbers, that is the document. Right, item 3, to hear, consider, and adopt a bond resolution as recommended by the Board of Selectmen, amending and restating a resolution entitled, a resolution appropriating $2,377,000 for the purchase of vehicles and equipment for the Department of Public Works, and authorizing the issuance of bonds to finance such appropriation to add equipment for Exhibit A. Motion to hear this item. Mr. Testani, seconded by Mr. DeWitt. The materials for this item begin on page 1 of the posted backup. The resolution is on page 2, and the exhibit that includes the updated equipment is on page 6. Mr. Schmidt will take us through this item. I understand Mr. Cattell is available for questions, and Attorney Staffstrom is also available if there are questions on this item or any of the remaining bonding and spending resolutions on the agenda tonight. Mr. Schmidt. Thank you.
You're welcome. Good evening. So this is very simple. We're adding one piece of equipment to the list of DPW equipment. If you remember, we did an initial 3-year period of equipment, and now we're on the second 3-year period. And so this is to add one piece of equipment. It's not going to cost any additional funding. It's really just a language change in the list of that's in your backup. And so this was for an over-the-rail mower. Over the summer, this past summer, DPW started recognizing that there was a need for line of sight around corners and on streets to improve the safety of pedestrians, cyclists, so that they could address areas where there's overgrowth of vegetation along the roads. And so that's what this is for. It would add that over-the-rail mower, which the town has never had in its inventory, and is pretty critical at this point to have in our arsenal against the overgrowth. So that's what this is for. Again, it's not additional funding, it's just to add something to their list of inventory.
Thank you, Mr. Schmidt. Questions from the board? Mr. Walsh.
Jared, I know this doesn't increase the bonding amount, but they found better pricing or something like that. How much does this new piece of equipment cost? Because we don't have, that's not attached. It just lists a schedule of equipment without costs. So give me some idea of what this piece costs.
Yeah, so my understanding is the cost of the piece of equipment is about $150,000. And one of the reasons we're able to do this within the authorized amounts to date is that there was approximately $110,000 that was remaining from the original amount that was authorized for that first 3-year period. So they purchased everything that was on the list from that first 3-year period and had an additional $110,000. So we would utilize some of that, which has been authorized and bonded as part of the funding, and then the rest of it can be paid for within the available authorization for the second 3-year period, which the board authorized back in the summertime.
Okay, so the first bonding resolution for the original package does not have to be amended either? Only this one has to be amended if we're using some funds from the first one?
That's my understanding, and we did work with bond counsel on this to be sure that we were moving forward in a proper way so that we were consistent with, whatever needed to happen on the for bond purchasers and the like.
Through you, Madam Chairwoman, can I ask bond counsel a couple of questions?
Yes.
Mr. Staffstrom, so you heard the question I just asked to the Chief Fiscal Officer, correct?
Yes, I did.
So what's the difference why the first one doesn't have to be amended, but the second one does, if we're using $100,000 or $150,000 from the first bonding resolution that was left over and didn't mention this piece of equipment, and now we have to list it on this second one, but the first one doesn't have to be amended when it sounds like most of the money's coming from the first one.
Yeah, what we typically recommend to our clients is if they've got money that they've, in this case, Mr. Walsh, the money was already bonded, so the money is on hand. Once the money is on hand, the finance department can use any of those bond proceeds for any project that's already been approved by the board. So what we recommended to Mr. Schmidt is that he use that money to purchase equipment that was on the 2023 list, which would leave money available in the 2023 list to then add this piece of equipment. We always want our clients to use the bond proceeds as quickly as possible for only obviously approved projects.
Great. Following up on that, so if we have any bonding that's been approved and we've bonded it and have the proceeds in our account, we can use them for anything, a DPW project, the sewer facility, or a school building. Is that what you're saying?
No, it would have to stay within the category of projects that the Board of Finance approved. But in this case, since the Board of Finance had approved the 2023 list, we recommended that Mr. Schmidt use the money to fund the 2023 list. If the board decided not to approve this additional equipment, then you would actually have a surplus in the 2023 bond authorization, but that money hasn't yet been all raised, which is the 2021 money has all been bonded already.
All right. So I just want to know for future, it can only stay in the category. So in this case, the category is trucks for the DPW.
In this case, the money is being used exactly for what it's supposed to be, all within the same category. Along the lines of the board has discussed the 3-year plan for upgrading your equipment.
Okay, but it can't be used for anything else within DPW. Say they were going to take, put new doors on the solid waste recycling plant. It can't be used for that because that's not a truck or that's not anything else. That's something completely different within their budget or within
Correct.
the department.
I think that's correct. The way the Board of Finance here and the way you work in Fairfield on funding this, that would be the case. A lot of our clients, for example, will approve a lump sum of money to the Public Facilities Department for equipment. If that was the case, we probably wouldn't even be back before this board at this point in time. But since you had outlined a specific list of equipment, is why we recommended and actually advised the finance department that they had to come back to the board to just add this piece of equipment because it was not on the original list.
Great. Thanks, John. I'm just trying to firmly understand this as we go forward. Thank you.
All right, Ms. Leclerc?
Could I ask a follow-up question on that? So we try very hard to match the bonding period to the equipment. So it's referenced here that this is 15-year bonding. Is this equipment, will it last at least 15 years? And the money that's being spent from the prior bonding, is that also 15-year?
Yes, that this equipment will last at least 15 years. Yes.
The money that was already bonded, that from the prior period, that
Was for 15-year equipment. Yep. Yep.
Thank you, Ms. Leclerc. Other questions? All right, we can move to a vote. All in favor of adopting the bond resolution referenced in Agenda Item 3 and set forth in the meeting backup, please raise your hands.
Aye.
Okay, and I see Mr. Stark as well, so it is unanimous, 9-0. Thank you. Moving to Item 4, to hear, consider, and adopt a bond resolution as recommended by the Board of Selectmen entitled a resolution appropriating $973,090 for the cost of pre-construction services for phases 2 through 5 of the air conditioning upgrade project at various schools and authorizing the issuance of bonds to finance such appropriation. Can I have a motion to hear this item? Mr. Mottola, seconded by Mr. Walsh. The materials for this item begin on page 8 of the posted backup. The resolution is on page 9, followed by the project justification. Is Mr. Papageorge here? No. Okay, so Mr. Superintendent Testani is here along with Mr. Schmidt to take us through this item. Thank you.
So I can just lead off here and talk about this from a finance standpoint. This amount of money is being proposed to help identify and to dig into the costs related to the HVAC project, which has multiple phases to it. So this would go into phases 2 through 5 to give us a better sense of what the costs are going to be related to those projects in those schools. And so that's what it's for. If you have detailed questions about the specifics about the project, superintendent's here to address those.
Questions from the board? Mr. Walsh.
This originally came up, as most of you know, at the capital planning workshop, and I was one of the proponents to try to ask that this come before us. So first of all, I'd like to give kudos to Jared and to Mr. Testani for getting this to us as fast as possible, because we need these numbers ASAP in order to properly complete our capital plan review and figure out how these numbers, or if ever they will fit in to the plan at a reasonable amount. So I think this is money well spent. We desperately need these numbers to figure out what we're going to be going, how we're going to be going down the path in the future. So I appreciate this becoming before us, and I will be supporting it.
Thank you, Mr. Walsh. Any other comments, questions? Okay, all in favor of adopting the bond resolution referenced in Agenda Item 4 and set forth in the meeting backup, please raise your hand. Aye.
Aye.
Aye. Is Mr. Stark? Okay, it is unanimous, 9-0. Thank you. We'll move to item 5, to hear, consider, and adopt a bond resolution as recommended by the Board of Selectmen entitled a resolution appropriating $1,048,706 for the cost of Roger Sherman Elementary School boiler burner replacement project and authorizing the issuance of bonds to finance such appropriation. Motion to hear this item. Mr. DeWitt, seconded by Mr. Walsh. The materials for this item include the bond resolution, which is on page 92 of the backup. The project justification is in the previous pages that were referred to. And I guess I'll turn this back over to Mr. Schmidt and Superintendent Testani.
So this is, again, authorization to bond and appropriate money for the boiler. There were questions about the life of the boiler and the previous life of the previous boiler, and they did exceed by far 20 years. And so it's appropriate for this to be an authorization to bond within a 20-year bond.
Thank you, Mr. Schmidt. Comments or questions from the board? Mr. Testani?
The other Mr. Testani.
Yes. Not superintendent.
Yes, thank you for the clarification. Now, just curious, Jared, so, I mean, obviously, I'm going to support this. $1 million for a boiler seems like a lot.
Two boilers. Two boilers,
Okay.
yes.
That helps. Just curious, have there been any benchmarking of other towns, what they've paid for similar boilers for the similar size schools?
I couldn't answer that, but this is the total coverage for the architectural design, the permits, and the construction, and the equipment, so
And the installation as well?
everything.
Great. Thank you, Mr. Testani. Thank you to you for your question. Any other, and thank you to both of you. Thank you to the Testanis. Any other comments, questions? Okay, all in favor of adopting the bond resolution referenced in agenda item 5 and set forth in the meeting backup, please raise your hand.
Aye.
Aye. Okay, it is unanimous 9-0. Thank you. Moving to item 6. To hear, consider, and adopt a bond resolution as recommended by the Board of Selectmen, amending and restating a resolution entitled, a resolution appropriating $3,653,150 for the costs of various Board of Education capital projects and authorizing the issuance of bonds to finance such appropriation, to increase the appropriation and bond authorization by $1,061,000 to a total of $4,714,150. So the bond resolution for this item is on page 96 of the backup. And again, the other information is on the previous pages. Mr. Schmidt and Superintendent?
I don't have much to add to that. It's just over $1 million that we're proposing to be approved, in addition to the amount that was previously proposed and approved. And and that's all I have on this. If there are detailed questions, and superintendent's here.
Yeah, I'll just add that this $1,061,000 is a result of us going out to bid and actually receiving bids on the project, and that was the increased cost from the original ask, which increased by over $1 million, as you can see. So that this is actual hard number.
Okay, thank you, Superintendent Testani. Questions from the board? Mr. Testani?
Yes, thank you. So, was there rationale behind that? So in other words, obviously it's $1 million more. Was it that we didn't estimate properly, or can you help us to understand why it's the difference is $1 million?
I'm not sure when the project was originally approved, but I think just obviously it was
2021, yeah.
So since then, costs have increased, and I'm not sure what how they came to the original estimate of what the cost would be. But again, this is a hard number in today's economy.
So you're saying the original estimate was the $1,061,000 less than this, right?
Correct.
And so, but there isn't, when you went out to get these final numbers, could they tell you, was it wood cost more, labor costs more? Did they just chalk it up to inflation across the country? I just want to get just a sense of, over $1 million is fairly significant from the initial, which was what, 2 years ago?
2 years ago, yes. It's about a third increase.
But no, they didn't give you other than,
I'm not aware of what the rationale was behind it. I know the bids came in. There wasn't a lot of bids, and this was the only viable bid that we could accept.
it sounds like a pretty bad case of inflation, right? So, thank you, appreciate it.
Thank you, Mr. Testani. Mr. Walsh?
I'm actually surprised it's not more based on some of the numbers we've been getting lately. I was surprised it's not 40 or 50%, which is where some of the numbers have been off lately. So good job.
All right. Other questions, comments? Okay. All in favor of adopting the bond resolution referred to in agenda item 6 and set forth in the meeting backup, please raise your hand.
Aye.
Aye. Okay. It is unanimous 9-0. Okay. Item 7, to hear, consider, and act upon a resolution as recommended by the Board of Selectmen approving the transfer of fiscal year 2022-2023 revenue surplus. See full resolution and backup. Can I have a motion to hear this item? Mr. Curley, seconded by Mr. DeWitt. So the materials for this item begin on page 101 of the posted backup online. Before we proceed, I want to make the board aware, because it's not explicit on the agenda, that this resolution included in the backup has been modified from what the Board of Selectmen passed last week. And Mr. Schmidt can walk through it, but for clarity, if this board passes the resolution before us this evening, it will have to go back to the Board of Selectmen for a vote, as well as the RTM. And just to add to the confusion, the wording in the resolution that's been posted was not only modified from the Selectmen resolution, but will be modified again this evening. So Mr. Schmidt will walk us through this, but for reference, board members have been provided a hard copy of some amended language that's been handed out. And when we consider this amendment, I can read this language into the record for the public, because this will be asked to consider this as the revised resolution. Now that sounds like a lot, but it's actually what's coming before us, or what's proposed before us, is actually going to be quite simple. So, Mr. Schmidt, I will turn it over to you.
So during our last meeting, I presented to you a proposal for what to do with the surplus. That has changed since then, due to different circumstances and new administration coming in, and they understandably want to have know what's going to happen with any of the surplus, and so that's what these next two proposals are for, to be able to effectively, in summary, to park money that's in the related to the surplus, so that they have a full chance to review the situation and determine what the best use of that surplus is. And so that's what these next two proposals are doing. Similar to what was presented, there are two components to it. There's a revenue surplus and a spending surplus. This first one in item 7 has to do with the revenue surplus. And so what this one is doing is to effectively put the surplus into one of two buckets. One would be to park it in the debt service reserve account, which has been done in the past. And the second would be to put it toward the fund balance. And so the intention of this amendment, which would strike the under what was voted out of the Board of Selectmen, would be to take this money and use it for the fund balance, but only to the extent that it holds us harmless, which is the board's policy. So whatever amount we need, which we estimate right now to be about $1.3 million, that amount would go toward the fund balance. And then whatever was remaining of the revenue surplus after that would go toward the debt service reserve account to be, the uses of it to be determined in the future. So that's effectively what this amendment would do.
Thank you, Mr. Schmidt. And I'm just going to follow up. Thank you for the explanation, just to follow up on it and to make it clear for the board and the public. So when this money is put into the debt service account, it will require a vote come back to us for a vote before it's used for anything. So just to be clear, we had a robust discussion during our last meeting about different needs for sidewalks and paving and potentially putting money away toward the fill pile and other things. I heard yesterday that Penfield is coming in over budget by $1.5 million. So there's going to be a lot of different things that are before us in the upcoming months. And so all this does is put this money aside until we can see a full evaluation and proposal, which will then require a vote. So that's all that is. And in terms of the wording, the other thing I'll say is that, what we found last year is, oftentimes there are small tweaks to the financial statements, the CAFR, before it gets finalized. Some of those are accounting adjustments, for lack of a better term. And so what this does in its current form is it sort of protects us that we don't, have a minor change in the ending number that ends up giving us more or less fund balance than we intend to have. So this would put an amount into fund balance to hold harmless. All the rest goes into debt service on this revenue piece. The expense piece will be similar, but this is just the first vote. Mr. DeWitt.
So when will this board know what that real number is? I mean, don't we know what that number is to hold or do no harm number is today? I know you referenced a number, but it's not on this resolution, right?
Yeah, right. So I referenced the number of 1.3 million, and that's an estimate. And we'll know when the books are officially closed, or at that point when they're closed, how much we would need to put into the fund balance in order to do no harm and keep us at the 11.76.
So the fiscal year 23 books when they
23,
right. Okay.
Correct.
Okay. Yeah, this is obviously I'm going to support this because I wanted to, I like the fact that we're moving that to do no harm, but to give the next administration at least as much flexibility as possible. So thank you for this.
Thank you, Mr. DeWitt. Mr. Walsh.
So we're dealing with the revenue surplus, correct?
Yes.
And correct me if I'm wrong. I'm going to make you earn your money tonight, John. What amount needs to go back to the RTM as well? Is it revenue or expense surpluses?
What amount nets to go back to the RTM on this resolution?
For approval, yeah, on how we're going to spend the surplus.
Just the revenue.
It's the revenue.
I just want to hear him say it on the record.
Yeah, I believe it's just the revenue.
Okay. So the Board of Finance has full authority by vote to decide what happens with the revenue surplus, correct?
No.
No?
The expense surplus.
Wait, maybe I misunderstood. Is it revenue or expense?
So the revenue, because it's revenue surplus, is new money that the town
Correct.
is getting that hasn't been voted on in any way or considered in any way. The revenue portion needs to go to all three boards, which is why this is coming to you from the Board of Selectmen, albeit with an amendment. And then we'll have to go on to the RTM after that to be approved.
Okay, but I thought it was a priority for this board to do no harm. This is our policy, right? So why wouldn't we be voting on the next item of just putting the 1.3 million, or is that the intent? To just put the 1.3 million away tonight, right now, as our board, where no one else can do anything with it.
It's kind of the opposite where you have to address the complement of that, which is
Right.
whatever you don't address and whatever you don't say is being allocated would automatically fall to fund balance, which is what we're trying to avoid here. We want to the amount to go to fund balance that is equal to the 11.76%. And so it's the rest of it that we want to speak to and make a determination about where that's going. And in this case, that's going to go to the debt service account. Otherwise, if you don't do that, then it's going to fall to fund balance.
Why can't we have a similar resolution on the revenue, on the expense surplus, what you guys call here?
I mean,
So
this would cover us. So nobody can prevent this 1.3 from going into fund balance unless all three boards agree. So by doing this, this is our vote. The 1.3 goes into fund balance, hold harmless. The rest will go into debt service. The expense piece will go into debt service to park it, if you will. So I'm not, I don't think there's a lot of risk here because this can't, be unilaterally undone by anyone else. Like we would all have to agree to it.
But wouldn't this still have to go to the RTM?
Yeah,
Yes.
but if they did something different, it would have to come back to us.
So if they reject it, yeah, but we still have to come to an agreement with them on how we do the revenue funding. Revenue spending, what we do with that surplus. We'll sit here and we'll all look at each other and we'll turn it down, they'll turn it down, whatever.
Yeah, I know.
Why don't we just deal with this tonight simply by doing it under the next item? Where this board just takes action on it and it takes $1.3 million. Because from my reading of the materials, there's currently a spending surplus of 2.7. So take 1.3 out of the 2.7, put it into surplus, and then we don't have to worry about it. We can park the rest up top on number 7.
You could do it either way. I think what you're proposing is to, rather than have it go through the revenue side of things, to go through the spending, we're proposing to do it through the revenue side.
Why?
Because there could be changes in either direction. There could be changes between now and the time that the books are closed, in either the revenue or the spending side. We're choosing to do this through the revenue side because I think we have a better handle on how much and the variability on the revenue side.
You think there'll be changes of more than $1.4 million on the expense side?
Nope. But we think there's more of a chance of that happening than there is on the revenue side.
I just don't want to go through this whole round and round with the RTM. I don't want to do that.
So I think in
Because they could then effectively take away this board's power and determine what, if they don't agree with this and they turn it down, they can effectively change what the fund balance is. And we've worked way too hard on this board for way too many years. And have set up a policy on this board of the do no harm. And if we don't do it the way I want to do it, there's effectively a chance of their doing harm.
Can I just say, I appreciate technically you're correct. I really don't think it's a risk. If that were to happen, it would have to come back to us anyway, and we could change our mind on the spending surplus at that point and fix it. I mean, the idea that, I just don't think this is controversial, but, I'll leave it up to Mr. Mottola. Do you have a comment?
So I hear what you're saying, Jim. If it comes back to us because the RTM does something that we don't like, then at that point we vote the 1.3 or whatever at that
Yep.
point. We could,
And then-
and we know, we'll know that what the figure exactly is by then, right? Because we don't know right now. You said the 1.3 is an estimate. You're not 100% sure, right?
Yeah, it's not gonna
Gonna
move a
change.
lot, but
Yeah.
yeah, it's an estimate.
So we could just do what Mr. Walsh wants to do if the RTM did something that affects our ability to control the fund balance as you've stated. If it comes back to us, then we can just vote that way.
And then it would have to go back to them and they could turn it down again. And we could sit here for months and months and months where they argue, no, we think your fund balance is too high. And we say, no, we don't think it's too high. And they say, no, we have other uses for it. Let's just say they want to throw it at an education issue. They want to throw it at the Board of Ed. So that's my issue. I think if we really want to protect our policy, we have the right to do that. We have plenty of money on both votes to do it. And I just say that we sit here and we say we want to protect the fund balance and we make that within our own purview and vote on it tonight.
Mr. DeWitt?
Thank you, Madam Chair. So if this resolution, so I'm tracking with Mr. Welcher. If this resolution said this board wants to take 1.4 million, just to hedge our bets a little bit, and put it to unrestricted fund balance, right? What's the harm there? That doesn't go to the RTM, right? Us moving that 1.4 doesn't have to,
From the spending surplus or from the revenue surplus?
revenue surplus.
Yeah, so the revenue surplus, and just to be clear for the public, when we have a revenue surplus, what we are mechanically doing is increasing revenue in the budget so that we can increase expense in the budget.
Right.
Meaning park it, right? So that is an incremental appropriation, and that's why we're effectively changing the budget when we do this. Grossing up revenue and expense. That's why it has to go through all three boards. So the expense surplus is a reallocation of an existing appropriation, which only has to come through this board. It's like a transfer.
Right.
So the point being made, and I would reiterate, I do not think this is a risk. I mean, if we want to change the wording on the fly here, I suppose we can do that if it keeps everyone comfortable. But I personally don't think it's a risk. That's all this is doing is saying, do no harm. The rest goes into debt service so it can come back before the bodies later.
And to answer your question, directly, we talked about this and whether or not to assign a specific value to it. And I think the reason that we didn't was to account for any variances. And so if we say in here, and if you approve it, that it's 1.4 million, and let's say something happens in the next couple of weeks where it's only 700,000, then you've put more aside than you need to hold things harmless. And which, not a horrible thing, but it's not in keeping with the hold harmless concept. And so rather than assign specific dollar amounts to it, we decided to keep the language more vague and just tie it to the constraint of the 11.76
Yeah.
million.
No,
percent.
No, I understand that. But Mr. Walsh, you're talking about doing this on the revenue side, not the expense
Okay,
side,
can
right?
I just suggest, if this is important to everyone, why don't we just, rather than continue to debate it, why don't we amend the language and then we can vote on this? Is that okay with everyone? Okay.
But I do want to say one thing. This is an idea I just had just now. That number 7 could almost remain the same because if we do assign the 1.3, but for some reason the numbers changed and went below 11.76, 7's language would still, to my knowledge, allow us to continue to fund a little bit more out of number 7, the resolution of 7, to make up any difference.
That's the way it's worded this way. My understanding is because again, we've had this issue in the past where the numbers change a little before the CAF was finalized. And then last year that took us from 11.36 to 11.75 inadvertently. We don't want to do that again. So I think this protects us. So, Mr. Curley, do you want to make a motion?
Yeah.
Or- Yeah. Okay.
Just a follow-up question, and I think Mary had a question too. But yes, I do want to hear from bond counsel, because just reading both of these past resolutions here, it does seem like it, to make it a motion to amend would be as simple as, instead of changing the body of the language with each resolution, if you change the word spending to revenue and revenue to spending on the reciprocal pages, I believe the resolutions otherwise will work as Mr. Walsh has suggested, so that we're protecting the fund balance at 11.76% without having to go through the RTM on the revenue side. Would you agree?
You asking me that question?
Yeah, to question the bond counsel, yes.
I think, in other words, so what Mr. Curley is suggesting is that the revenue amendment, we would just say, to here consider resolved. And then the paragraph would read, the portion of the fiscal year 22-23 revenue surplus resulting from actual revenue amounts that were more than budgeted revenue amounts, revenue surplus, shall be appropriate to the debt service reserve account. And then the language that's currently on the revenue amendment, we would swap the words revenue for expense.
And John, before you respond, I just, as part of your answer, the Board of Selectmen has voted on both of these, correct? I guess my question would be, as you respond, does it have to go back to the Board of
It
Selectmen?
does, either way.
They've only voted on the revenue.
Right, the motion that we're talking about right now has to go back to the Board of Selectmen regardless.
Is there, okay.
We're doing math on the expense side when we were doing math on the revenue side before.
We're not doing math on either side here.
Well,
We're
there's
just
the
saying-
point, there's math to figure out what the do no harm number is.
There's math to figure that out, but
Right.
we're not figuring out the math in the resolution, the way we were to propose the original one, yeah.
No, that's what I'm saying,
Right.
but now, instead of doing math on the revenue side, at some point, we're doing it on the
We'll do it,
expense side.
right, so we'll use the revenue, yeah. So if that's okay, we can make that, we haven't made the motion yet for the amendment, so we'll just read it a little bit differently.
Jared, you have the most current language, but I think that probably works.
It's fine. Yeah, I mean, practically, I don't see the reason to do it, but, I understand the concern. So I think effectively what you're doing is to, and practically for purposes of the language, where in this case, this amendment refers to revenue, I think, if I'm looking at this, you can substitute the word expenditure wherever it says revenue.
Can I'm gonna, let me go ahead and make a motion to make the amendment, and then if everyone can just make sure I've got this right. So I'll make a motion to amend the resolution as follows. Chief Fiscal Officer, to consider and act upon a resolution approving the transfer of fiscal year 2020, 2022, 23 revenue surplus. Resolved, and by the way, this replaces the entire resolution in the backup. All that was language, all of it. Okay. Resolved that the town hereby authorizes, approves, and directs the transfer of the fiscal year 2022, 2023 revenue surplus as follows. The portion of the fiscal 2022, 2023 surplus resulting from actual revenue amounts that were more than budgeted revenue amounts, in quotations, revenue surplus, shall be appropriated to the debt service reserve account. Mr. Curley seconds. Any comment on that? And Prue, you've got this? Okay. All right.
And then, so that's just on number 7, right?
Yeah, well, this is only item 7. We will amend again for item 8.
Okay.
Okay, so take this to a vote. All in favor of that amendment?
Aye.
All right, it is unanimous 9-0. Okay, all in favor of approving, of adopting the resolution approving the transfer of fiscal 22-23 revenue surplus as amended, please raise your hand. Okay, it is unanimous. Thank you. Okay, so we'll move to the similar item on item 8. To hear, consider, and act upon a resolution approving the transfer of fiscal year 22-23 spending surplus. Motion to hear this item. Mr. Walsh, seconded by Mr. DeWitt. Okay, I will go ahead. I can go ahead and offer, I'll make a motion to amend this resolution also as follows.
Sorry.
Yep. Sure.
Sorry, quick question.
Is it regarding the motion?
Yes, this motion.
Okay,
yeah,
go ahead and make the motion first, or?
Sure.
Okay, so the motion would be to amend the resolution to read as follows. To hear, consider, and act upon a Chief Fiscal Officer, to hear, consider, and act upon a resolution approving the transfer of fiscal year 2022-2023 spending surplus. Resolved that the town hereby authorizes and approves and directs the transfer of the fiscal 22-23 spending surplus as follows. The portion of the fiscal 22-23 surplus resulting from actual expenditure amounts that were less than budgeted expenditure amounts, spending surplus in quotes, shall be appropriated to the town's unrestricted fund balance. The amount of such appropriation to unrestricted fund balance may not exceed an amount that causes the overall fund balance to exceed 11.76% of the town's FY 22-23 operating budget. After the appropriation of the spending surplus to the unrestricted fund balance, any remaining spending surplus shall be appropriated to the debt service reserve account. So second on that motion, Mr. DeWitt. Mr. Curley, question?
Thank you, Madam Chair. This truly is a nit, but I know that 11.75% was the number from fiscal year 2022, and that's the number that's been in everyone's head in terms of do no harm. I see that the resolution talks about 11.76, and while 1 basis point isn't a big number, I'm just curious about is that just for
Yeah, give us some flexibility to round. Like that's what it is.
Okay, just wanted to understand. Thanks.
Okay, thank you, Mr. Curley. Other questions from the board? Okay, all right, so we can vote on this amendment. All in favor of approving the amendment to the resolution to item 8, please raise your hand. It is unanimous, 9-0. All in favor of adopting the resolution approving the transfer of fiscal 22-23 spending surplus as amended, please raise your hand. All right, done. Thank you, everyone. Okay, move to item 9, to review the current status of the town's pension and OPEB funds. So the materials for this item are on page 107 of the posted backup. Ms. Carolyn Trabucco, who's the chair of the Joint Retirement Investment Board, is here to take us through this item. Welcome, Ms. Trabucco. Thanks for being here.
Hi, everyone. Good to see you. Congratulations. Nice to see you. Thanks for all of your service, Chris. All right.
Missed you at the last meeting.
I know I couldn't make it, but you got Jack. Jack does a great job. I hope you filled me in. All right. So here we go. Ready? The September quarter end update, third quarter 2023 update. There are 3 handouts in your packet. Unfortunately, they're not in order. And so here we go. There are 3. There's the pension performance there's the pension update, there's an OPEB update, and then I included the Vanguard presentation and analysis update that they presented to us on the October 25th meeting of the JRIB. And in that presentation includes a private equity pacing analysis that we asked them to do for us. The pension is in your very voluminous handout. It's on page 140. The OPEB starts on page 109, and the supplemental one I gave you starts on page 170. I'm going to start with the pensions as we normally do, which starts in your packet at page 140, but I'm going to refer to the pension presentation page 4. Okay. And if you notice, it's a little different presentation style. Vanguard switched around and changed their presentations. They've new software, new performance reporting software. So we're all getting used to it. It's brand new. I won't say that I'm fluent in it yet, but we will be. So here we go. So the market value of the pensions as of September 30th was $427.2 million. The 3-month performance of the pension was down 2.55%. That compares to our benchmark, which was down 2.46%, so we slightly underperformed. The allocation of the pension fund hasn't changed in some time. We are 52% in equities. That remains split 60-40 domestic to international. We're 33% fixed income, which is split 70-30 domestic international. We're 8.6%. They call it alternatives. I'm going to have them change the labeling on that. It's private equity, and 6.2% in real estate. I think they've split that now into page, that moved forward to their page 5, right? So it used to be on one page. We have that on one page, and now it's split. Now they've split it out onto 2 pages. What was going on to kind of over that market period of time, if you want to think back to it? It was the time of the Magnificent Seven. 7 stocks contributed to 76% of the total stock market index fund return. Those 7 stocks, if you remember them: Apple, Microsoft, Alphabet, Amazon, NVIDIA, Tesla, and Meta. It was also the time when rising rate outlook pressured stocks globally. Emerging market stocks in particular underperformed. It was the time when energy was the only industry gainer in both August and September, and that was driven by OPEC cuts and U.S. production constraints. And it was the time when the yield curve flattened into what was called a bear steepening, causing long-term treasuries to sell off, right? And so it was, it wasn't the best of times for a quarter. If I could call your attention to OPEB, so I'm going to ask you to flip into your packet to your packet page 109. In the OPEB page, it's my page 4, and then it'll be spread across 2 pages, so page 4 and 5. The market value of OPEB is $77.2 million. The 3-month performance of the OPEB is down 2.93%. The benchmark was down 3.17%. The allocation of OPEB remains as it has been. It's a little more aggressive in its posturing. It's a little more equity tilted. It's 70% equities, split 2/3, 1/3 domestic international. It's 19.4%, so 19.5% fixed income, which is split 70-30 domestic international. 8.6% of the fund is in real estate, and 2% is in private equity, which they labeled alts, but I'm going to have that changed. We have a similar market backdrop. If you remember, the OPEB funds weren't large enough really, and so we've just begun to invest into private equity, and so that's why that private equity position is so much smaller. Other news from the JRIB. Last month, the JRIB did vote to allocate to the HarborVest Fund, which is a private equity fund of funds. The allocation target remains 10%, right? That's in the IPS. The pensions are currently at 8.6% in private equity. The OPEB, as you just heard, is at 2%. It will take a couple of years to get to 10% allocation. in private equity. And the reason for that in pensions is we're taking distributions from our older legacy fund positions. And with OPEB, it's just a matter of, how capital is called as it's needed into the fund. The other thing coming up, new and exciting here for JREB, this will be the year coming up of the biannual review of our investment policy statement. I know you've been waiting for this. So here we go. And then we have been humming along with the administrative transition over to Milliman. It's nearly done. I'm actually really, really excited about this. And I think our plan members and the beneficiaries are going to be thrilled with it, to be able to update their addresses when they move, to be able to, to go in and check their balances and not have to just call for that information. I think it's going to be a real great quality uplift for our plan members. And so it's been a huge lift for the town, and I can't thank the administration and Jared and his office and HR and just the heavy lift that it's taken to get all of those files out of filing cabinets and scanned and over to Milliman and checked and audited and then entered and then uploaded. And so it's been a big effort. So I'm thrilled that we're almost there. And that's it. Do you want to add to that?
No, yeah, just to piggyback on that, I think, Megan Brandt in HR was the one who really spearheaded this with Milliman. And I think one of the big things that it's going to give the pensioners is consistency and, and predictability to what they're getting, because a huge portion of this was going through the pension plan and identifying all of those aspects of pensions that need to be defined. And so that's what we did. And it took a long time, but I think going forward, it's gonna, like I said, it will give them predictability, and it'll be consistent across whoever is within whichever union they are.
And that's what I have.
All right. Thank you. And I'll just add my thanks to the administration for the work to do that, and also to the JRIB and Ms. Trabucco for spearheading this and really pushing to make it happen. Nice to see us move forward into the, which century? 21st? Well, good move in terms of quality and hopefully efficiency for our HR department. Okay, questions, Mr. Walsh.
Carolyn, you mentioned on the private equity, one of the changes you've recently made was to go to a fund-to-fund. Is that both in OPEB and on the pension side? Or are we still getting added positions on the
Yes.
pension side?
Yes. So we have legacy fund of funds.
Yes.
Right, Lexington, Mesereau are two legacy fund of funds. This is HarborVest.
Okay.
This is our second year investing in the HarborVest funds.
Okay.
Okay, so it's just another vintage.
Okay.
Okay, but we began the diligence on them several years ago.
Mhm.
Vanguard introduced us to them. And Vanguard, a nice part about working through Vanguard on that is that they have a team of analysts who also provide added diligence services onto their funds.
So they've been providing analysis and reviewing them for a lot longer than we have.
A lot longer than we have, and they also provide reduced fees.
Great. Okay, thank you.
Other questions, Ms. LeClaire?
Quick, you mentioned the biannual reporting. Can you give us the time frame for that?
So the goal is to introduce it to the JRIB in January, right? So my term is done, right, here in November, and if I'm reappointed or, extended the next group, we'll see what happens there. The way the bylaws are written, it has to be presented to the JRIB in January for them to vote on at the next meeting after that. So it comes up quickly, right? And it hasn't moved much over the years. So I would not expect anything dramatic. It is something that Vanguard will have an opportunity to weigh in on. They've had opportunities to look at it in the past. And every time we look at the portfolio, we're effectively managing funds to and against kind of the stated policy. This is the policy document.
Thank you, Ms. Leclerc. Other questions? Mr. Stark?
Could you give us a refresher on what the pacing model means? Take page 12 of the Town of Fairfield pension.
Yeah, so what they wanted to look at was if we didn't invest in the private equity, if we did not make an allocation this year, if we skipped a year of an allocation, what that would look like modeled out in each successive year, right? If we continued on an allocation of, at our current pacing, what it would look like net to the pensions net funds coming out, this plan distributions, net versus capital calls going in. Right. And so they tried to look at if we did the ongoing commitments, that would be the first line of 12. Right. So if we look at the net asset value we had in the pensions on private equity, you can see 23 was going to come down a little bit. Right. If we looked at kind of where our allocations would kind of come out, if we were targeting 10%, where we would get to 10%, if we kept our current commitments, which is to allocate to private equity with a target of a 10% allocation, what we would need, how much we'd have to invest in order to maintain the 10% allocation. If we wanted to stop after 2023, so we made this one and then we were done, right? No more private equity. We don't believe in the asset class any longer, right? We wanted to kind of run that down. What would that look like? And they modeled that out. And then they looked at the next one. If we just said, if there were just simply no further commitments to private equity, what would that look like? Right. And so the point he wanted to make was, and the point he wanted to present to us, and it probably shows more clearly if you roll forward a couple pages to 15, right? And we can probably see a little clearer on the numbers. Was to demonstrate kind of how the modeling of the fund would look long-term, because our goal, right, is to look at it against a discount rate, right? And the private equity is actually pretty helpful to us when looked at on a long-term basis and then discounted back.
So page 12, that's all the discretionary element, and capital calls are not discretionary, correct? Right? You really have to make those. Okay, so.
Yeah, you have to make it. And bear in mind the way that the way that we're working with Vanguard is the capital calls, when they come, will come out of the equity bucket and will then go into the private equity, right? So when you look against kind of our policy level, the IPS, kind of the allocation we have in equity, we're high, right? It's high. And so we will fund the private equity from the equity, right? And it will bring, you know, kind of bring the equity down, but still stay within its policy range.
Right. Okay, thanks for that. The active passive line is set pretty high here, right? I mean, you make some you make some allocations to asset classes, but you're not going to go in and say, you know, increase the corporate bond allocation to, okay, good. Because this slide deck would tell you that you should do that, but I also totally get not doing it.
Not doing it. Not doing it. Yeah, I mean, I think the view long run, the best solution for us as a town, right, looking at this and the way that we operate is to be passive, you know, and we have the very broad exposure to the market as a whole, which has been great. You know, we had all 7 in the Magnificent 7. We had all 7. We have the full market, but we had all 7. And then we have the full bond market as well. Right? We have them all.
Thank you, Mr. Stark. Just a quick question. Anything else? So change of topic here. Is there anything else that the JRIB has been discussing in terms of changes in discount rates, assumptions, anything that would that the board should know might impact the ADEC and the budget this upcoming year?
No. No,
Great.
no, no, actually, we're in a good spot. Remember, higher rates.
Yep.
Higher rates are great for your pensions because we have such a nice fixed income allocation. Those higher rates are great for us. We don't have to work as hard to chase the returns. And so that part, it's great. We already did the heavy lifting on moving the mortality tables to the public sector mortality tables, right? Rather than being on a blended public sector, private sector, that's done. Any other work to be done? Other than, I don't see. I'm not aware of anything. Something could come up, but I think it's pretty much business as usual.
Okay, no, that's
Yeah.
good, because I know that when those changes happen, they're typically many, many months in the making. These are vetted over a period of time, so, okay.
And that's why we moved that to July, right?
Okay.
Move that right out of the way.
All right, thank you. Any other questions for Ms. Trabucco? All right,
I would just like to thank Ms. Trabucco for her term and service. It's been a pleasure working with you on the Board of Finance,
Can we
and
re-elect you here?
we feel very fortunate to have had you in that position. So thank you, and thank you for making it always easy to ask questions and not make some of us feel foolish. Thank you.
It's been my pleasure. It's been my pleasure.
I
I
will.
might be back. I might be back. We're trying to figure that out.
I will say the same. Thank you. Yeah.
I think I have one more in me.
She just has to agree to it. That's the problem. All right. Thank you again. Yes.
Everybody's super nice. I know. I really do like it. Well, thank you.
If they double your salary, you'll be reappointed, right? Okay. All right. Thank you again. All right. So we are going to move on to, let's see, where are we? We are on item 10 to review the Board of Ed fiscal 24 first quarter financial update. So the materials for this item are on page 224 of the posted backup. And we have Ms. Courtney Laborious, the CFO of Fairfield Public Schools, and Superintendent Testani. And I see Mr. Peterson here as well. Welcome.
Thank you so much. And through the chair to Mr. DeWitt, I wanted to second, I really appreciated working with you and including us in the purchasing policy decisions and your graciousness with our conversations about it. So you'll be missed, even though I haven't been here for a long time.
Thank you. Well, thank you for all your hard work on that policy too. Thank you. Appreciate that.
Okay, and to the public, so pleased to present the first quarter results for the Board of Finance, first quarter projections. As we know, it's very early in the year, so we're currently projecting a relatively flat amount of, I apologize, it's been a long time since I did this, $6,901. So the first is personnel. We're closely watching the personnel budget. This first quarter report comes early in our year for us, for schools, because we have only processed 2 payrolls, and we're still staffing up at that time. So we'll have a better look at the personnel at Q2. We do know that we had some enrollment increases that resulted in additional staffing. So we're watching that. That was related to the board policy about enrollment for our elementary schools. So keep maintaining minimum class sizes. So we look forward to reporting out as we see more experience with the payrolls. On the fixed, and so we have a slight negative related to that, as you'll see. When you look on page 225, 226, 228 of the board backup, I also have it date stamped page 4 BOEQ1, but for the public, if you're looking at the electronic version, it's page 228 of your backup. So again, you'll see that negative 117, which is in that salary staff replacement for the reasons I just explained. And it includes an assumption about vacancies and leaves of absences that we'll go into further as we have more information in Q2. On our fixed charges, we're seeing a minor surplus. I'm also happy to report when we discuss the board budget, that it won't be as big of an increase on the insurance budget because we are looking to have a better than originally predicted increase for the cost of premiums this year of anywhere between 3% and 7%, and we're told right now to conservatively budget at the 7%. So we're projecting a minor surplus there associated with less uptake than anticipated in the higher cost insurances for families, for example. Pupil personnel expenses, you'll see that we're projecting a negative 240. That includes the busing for pupil personnel services and special education. We worked with the Board of Finance, with the Board of Education to really right-size the special education budget 2 years ago. And we're still feeling as though we're on track for that as of Q2. You're seeing a slight negative because there was a mandate from the state that happened after the adoption of the budget, which increased, first you saw an increase to the age of care. So for youth that are in our care, age up to, is it 26? 22, I apologize. Yeah.
In the past, on their 22nd birthday, they would be done with us no matter what time of the year it was. Now we have to keep them through the end of the year of that 22nd birthday. So that has caused an increase to the budget as a result of that.
Yeah, and that was unbudgeted, and we'll have an increase to the budget when we present our 24-25 budget, when we look at budget to budget. But that's why you're seeing a negative. We have a really good process in place for working with the town for RFPing services that we are able to RFP to get the best pricing. So, and we also have a new process where we're really closely monitoring all the purchase orders for the support services. We're encumbering as we go and then revisiting it every quarter to adjust those encumbrances. So we have a better sense in real time of what we expect. And we're also adjusting the revenues as we won't wait now. We used to wait for the excess cost revenue, which was a big number, till the third quarter. Now we're doing those projections much earlier, and we're making the adjustments as it comes real in the third quarter. So we think that's a decent number, at least as of now. School expenses, we always spend our full school expenses. You're seeing a little balance there in copying services. That's because it would be a larger surplus in the copying expenses, but it's embedded in some of the school budgets, school building-based budgets, I apologize, but that's because we moved to a scan copier, so we're seeing a decreased use of the copiers and decreased use of paper, so that's great. We'll see that in the budget as well. Support expenses, relatively flat. You'll see a minor negative in legal services. Superintendent Testani has had us go out to issue a request for a proposal for the legal services, and we're in the process of reviewing that. So hopefully that will come down. But we've done a transfer out of legal business services into the personnel budget because at the time we thought we might be able to hire a person in-house, and we're still looking into that to see if that's a possibility. So you see a minor surplus in the support expenses. On the maintenance, operations, and transportation, we spend down the full budget because that's, the multi-year major projects. We hold off on some of the spending until end of years. We see how the utilities warm winter, but we have through the town locked in good rates for all of our utilities that we were able to lock into. So we'll see how the winter goes. And on the buses, we do anticipate seeing more favorable balances on the buses because unfortunately we don't have the budgeted number of bus drivers. So we are running routes a little bit longer for that reason. And our Mr. Papageorge is working very closely with the bus company to aggressively get those drivers or oversee and hopefully get drivers. But this is projecting as though we have the full gamut because we hadn't, as of Q1, seen the bills yet. We see credits on our bill if we don't run the buses. That's the way we wrote our contract. And for the capital outlay, we're showing full spending. Don't know why that minor $12,000 overage. I have to look into that. That's operation plant equipment. I'm assuming it has to do with plumbing supplies or some other supply piece, but overall that's net 6,900, so we're showing a balanced budget as of Q1. And I'll pause there to see if there are any questions through the chair.
Thank you, Ms. Laborious. Mr. DeWitt. He has to have one more special education question before he retires. I just want to say that.
I'm actually gonna say thank you, actually, on personal pupil expense. Some will look at that and say you're $240,000 over budget. But 2-3 years ago, that had an extra zero on it. And I very much appreciate that that has come down. That's a success right there for me, right? So I just want to say I appreciate the administration, and I know the prior administration had rolled this number in. So I think we're spending it at the right level, and the fact that we're this close is really, I want to say thank you on that. My first question, I guess, is it looks like $101,000 came out of support expenses, and that was transferred to personnel services. Just curious, what is your expense? You talk about a grant under support expenses. Is that the 100,000? Is that where you thought you had 100,000 to transfer out of, or?
Oh, no, I apologize. That was, it was in the original budget, but for some reason it didn't get reflected in the dollars. I think this was for a 0.6 FTE that we were paying for we were attempting to hire. And we were transferring it from the legal services, saying that we wouldn't hire it unless we hire that person unless we had compensating offsetting savings. We haven't been successful in that hire, so it may transfer back.
And that pretty much went to personnel services. So that makes.
Correct.
So on your transfer, just so I'm clear, on your transfer, the bracketed amount means you've reduced the budget, right? Yeah, that's right. Okay. And I think that's it. Thank you.
Okay, thank you.
All right. Thank you, Mr. DeWitt. Other questions from the board? Q1 is always easy. If you're in trouble in Q1.
Yes.
Yeah.
Just a quick one, Madam Chair.
Sure, yeah.
Just wondered, Courtney, the new rule or law, whatever you want to call it, the state of Connecticut with kindergarten, is there any anticipated impact to the budget?
We're not sure yet. We are surveying current 4-year-olds that we anticipate will fall in, we know that will fall into that September 1 to December 31st. Some parents have indicated they will continue to send their kids on to kindergarten because we have given them that option because they were notified late by the legislature putting that in at the last moment. But there are some that have indicated they will keep them back in preschool, but we really don't have any hard numbers yet until we start registering for kindergarten. And that usually amps up end of January, February-ish.
So the law was passed when, Mike, do you remember?
Right
I
at
don't
the
have
end
it
of the
right.
session.
At the end
They
of the
snuck it in, yes.
So was there a time frame of when the town had to implement it?
Next year. So
It's given a year.
but it's not a hard start date as it was in the past. So if you were born on January 1st in the past, you had to wait until the next year to register. You couldn't register early. Now it's left leeway up to the district that parents can request. And with some sort of assessment, which the state has not provided yet, they can waive and continue on to kindergarten.
Depending on the district or?
And all districts, they
Okay.
all have to create a process for
procedure
parents.
process.
Yeah, so
Okay.
this year, we're just letting any parent who requests it, no harm, no foul, they can move on and go to kindergarten in that September 1 to December 31st range.
So you really won't know the impact on the budget for
We're
quite a
not
long
gonna,
time sometimes.
well,
Or-
every year is a mixed bag,
I
really.
was just going to
because
say,
it's
may
very-
not even have an impact, right, at all, if you're giving leeway to people.
It may not, but it could have a little bit of impact on the preschool numbers increasing.
Thank you,
Thank you.
Mr. Testanis. Any other questions?
Oh, and I just want to say, we do have a demographer that does we use Malone McBroom or SLAM, formerly Malone McBroom, to do the projection. So our section ask is based on that also. So they have an assumption behind the number of kindergartners that will then refine as we see who does. Yeah.
Thank you.
Great. Thank you. Thank you for being here. Appreciate it.
Thank you.
Happy Thanksgiving. All right, we will move to item 12 to hear an update. I'm sorry, to review. No, we are on item 11. Item 11, to review the town fiscal year 24 first quarter financial update. The materials for this item are on page 285 of the posted backup. Ms. Caitlin Bossy, the town controller, is here to walk us through this along with Mr. Schmidt. Welcome.
Good evening. As Lori stated, we're starting on page 285, which is the summary sheet that you guys have all seen a million times. It's looking good so far for Q1, as Courtney kind of stated, it's early. This year, we have a couple new lines down at the bottom, which are the budgeted contribution to surplus, which is something we haven't had in, I don't know, maybe 4, 5, no, but probably longer than that.
Since COVID, I think.
Yeah, maybe right before COVID. So that's the 1.2, but we'll talk about that as you guys know, we start off with the revenue. Revenue is looking pretty strong. The major driver, again, this year in Q1 is state aid for $1.5 million. We got this last year as well. Jared could talk a little bit probably more about it than that, but it's the municipal revenue share that came in last year as well. So we were happy to see that 1.5. It's already in the bank. So that's already here. That's a firm number. But if Jared, you want to talk to that.
Yeah, when the state reformed MRSA and pilot program, they put in place a piece of it, a component of it that was dependent upon the state's receipts and sales tax revenue. And if it reaches a certain level, as a percentage, that they would send some of that money back to the cities and towns. And so for the last 2 years, maybe 3, I think definitely the last 2 years, we have gotten this. The issue is, and why it always shows up in our quarterly reports, is that we don't know about it until August or September of the year. So, and it's not something, and we're advised by CCM and by the nonpartisan offices of the state to not budget this because it is so, it's not terribly volatile, but the projection that they would hit their target that they need to hit in sales tax revenue is not predictable at all. And so they suggest not including it within the budget, so we don't. And as it turns out, over the last 2 years, they have hit their target, and so we've gotten the additional revenue.
Thanks, Jared. So that's the major driver of the favorable revenue piece. Starting at the top, we wanted to just quickly go down current, prior, and interest. We are predicting a slightly unfavorable amount for those 3 items combined. We took a hard look at our prior year levy and interest because last year's came in $1 million under. So I met with Dave Kay, the tax collector, and Frank, and we looked at it. And so we were looking at prior year collections overall, a listing of really what's out there. So last year we collected like 28% of it. And we were at, from last October, because we had October's numbers, we were at 12.5%. We're lagging this October a little bit of our total prior year. We're at 9.25%. So we're being conservative, saying that we're going to be under again in the prior and interest levy. So we also took that in consideration with the current. There is slight favorability in the current piece due to the senior tax credits and the town tax relief program. Like last year, we were slightly favorable there as well. So if we took those 2 pieces together, we're predicting a slightly unfavorable 475 for those kind of couple pieces. We're going to watch it throughout the next couple months. Obviously, we only have 1/4 of current in clearly at this point. The next thing, reached out for conveyance, reached out for building permits. As of now, too early to tell. Looks like they're all trending on budget. Same with fire marshal fees, because those kind of a little bit go hand in hand. Park and rec revenue, again, slightly higher due to early numbers coming in from the summer months, basically predicting some beach parking and stickers, about 100. So what I believe the Park and Rec staff does is they look at actuals, and then they looked at prior year's actuals for the next couple quarters. But again, we had a great weather last year, so keep all that into consideration. About 100 of the 333 is related to that. 71,000 of the 333 is a firm number. That's that program number that we look at the ending balance in the rec trust fund as of September 30th. Anything over 200,000 comes to the town. So we were slightly favorable on that number because that came in 71,000 favorable over what we budgeted. The rest, golf greens fees, I figured Mr. Curley could talk to those if he wanted to. Slightly over budget, we're predicting for the year. But again, last year was a great weather-wise, so 100 there. And lastly, slight favorability on the Burr Mansion rentals. So those kind of pieces are kind of making up the 333 that we're hoping to come in on the Park and Rec revenue. And the last piece of the revenue is some more money from Storm Ida back in September of 2021. We actually got 256, this is in the bank, for various culverts throughout town. And not that you care, but I'll tell you anyways, Hillside Road, Twin Brooks Lane, Horse Tavern Brook, and Brookline Parkway, and Verna Hill culverts. Monies in the bank came in from the feds for the 256. So all of those variances put together are about totaling up about a 1.7 we're predicting in favorability on the revenue pieces. So does anyone have any questions on revenue, or should I go down to expense?
Yeah, go ahead. Expenses.
Expense side, vacancy churn, there's always some, it's fluid. It's a fluid number. So I take the best available that we have. Currently, there's not too many open full-time positions, but there are some, and really most of them are close to being either filled or, they're actively out there. And again, these change day to day. I got a list a few weeks ago, and some of them have been filled since, offers out. Just to give you a sense, there's an assistant town clerk, conservation crew chief, junior purchasing buyer, the IT help desk has recently been filled. There's one police officer, one firefighter. I believe there was an offer just out for animal control. Building inspector, I believe, is either filled or close to being filled, and one library associate. So again, it's the churn, it's the number of days that's open, it's potentially having a lower salary coming off of a higher salary. So we're estimating around 600,000 for the vacancy number there. The last number on the sheet really is the Park and Rec expense. Again, kind of go hand in hand with the increased revenue, some seasonal staff related to golfing, and some increased costs that they're seeing on the cost of fertilizer, seed, sod, coming in at the -71, maybe possibly unfavorable there, netting to a 529. Favorable on the expenses, if you add that to the 1.6, getting the net estimated variance of about 2.2 is what we're thinking for Q4, or coming in at Q1 for FY24. But again, you have to add in the budgeted contribution to surplus, making it around a 3.4 number as of Q1.
Excellent. Thank you. Questions from the board? Mr. DeWitt.
Tell me if I'm wrong, but I thought the new firefighter contract has, we're hiring more firefighters overall. That's clearly not reflected in our budget, but when will that go into effect? That will be fiscal year 24, or that?
That begins in fiscal year 25.
Oh, fiscal year 25. Okay, great. All right. Thanks, Frank.
No problem.
Thank you, Mr. DeWitt. Other questions? Q1 easy. All right. Thank you, Caitlin.
Thank you, Caitlin.
This might be record time for a quarterly review if we can finish this fast.
I'm gonna have to go home.
All right, so we'll move to item 12 to hear an update from the CFO on capital ARPA projects. The materials for this item are on page 321 of the posted backup. Mr. Schmidt.
All right, so you have the capital reports and the ARPA reports in front of you. There are many line items. If you have any specific questions, I suspect the question will come up about ARPA and, how much is remaining, how much is unallocated. And, I talked in the past about having a locked-in plan as much as we can by the end of this calendar year, which is still my goal, that we would take full account of what's left over. And, whether it's projects in here that have gone over. One in particular is Perry's Green, that we know is going to be over what we had budgeted from ARPA. And so, there's opportunity to reallocate some of the unallocated money to a project like that. And so to take a look at all the projects and by the end of the calendar year to have that all set into place. We do have the electric vehicles. We have the 6 that were leased, as we spoke about before, and the other 15 that were purchased. The bolts that were purchased that we have now on our town property. And so those are in place now. Other than that, like I said, within the next month, we'll have to come before all the boards to get approval for how any currently unallocated amounts and anything where there were excess allocations and how to reallocate that. That will happen within the next month or so.
Thank you, Mr. Schmidt. Just to clarify, are these numbers as of, what date are these as of? And the reason I'm asking, the electric vehicles caught my eye. I think we've purchased the remaining vehicles, but it looks like half the budget is left. Is this as of September 30th or?
I know that the amount did come in under budget for both the leased and the purchased vehicles were under budget. That particular one, I may have to find out whether or not that one has been updated further. Generally speaking, these were updated as of within the last 2 or 3 weeks.
Yeah, just, and that's why I'm questioning it, because it seems odd that at a minimum they'd be encumbered. I mean, I think they came in maybe a little under budget, but that's like half the budget, so.
I'll get back to you on that,
Okay.
on that particular one.
Yeah, just, in a number of these, okay. So these all, and I know we've talked about this a number of times and you referenced it, but all of these need to be fully encumbered by next December 31.
Yeah,
Right.
correct.
Yeah, okay.
Yep.
Okay, questions from the board? Anyone? Questions, are there any highlights on the other capital projects that we should talk about? Any big changes?
No, you referenced it earlier, Madam Chair, the additional amount which I'm not sure has been finalized yet, but there's going to be some additional funding, it appears, for Penfield that will be needed somewhere in the $1.5 million range. And other than that, I don't have any major highlights to point out there.
All right, and that would have to go to all the boards, and changes to this ARPA schedule, whether they are reallocations, even reallocations go through all the boards. Is that correct?
Yes.
Okay, thank you. Mr. Curley.
Can I just ask a follow-up on the Penfield point? I just want to make sure I heard that correctly. So back in the second quarter of the calendar year, back in the spring, we all three boards approved 11.5 million for Penfield. And if I heard you correctly, the current estimates are $1.5 million more. So now it looks like it'll be closer to 13. Is that what we're hearing?
That's my understanding based on the bids, yes.
Okay. And have all the bids been received and reviewed to your knowledge?
To my knowledge, yes.
Okay. Okay, no further questions.
Thank you. Other questions from the board?
Just following.
Mr. Walsh?
Curley's, considering everything and how much these prices are going up, I think the $1.5 million on the low side of what increases have been on everything that we've seen come before us. So kudos, I guess, to the town that we're getting something only up probably 15% as opposed to 30, 40, 50, 60%. So good job.
Yeah, I mean, I think what we'll have to see is, I'm not sure if that $1.5 million is inflation or something else. So I know the project has changed as it came to us, as the information came to us last time. So I think that will have to be understood once we vote on it. Yes.
And then just a more general question, of all the projects here, are there any that we should be aware of that are just falling way behind schedule or falling off the radar, or just general yellow flag on the project itself? Not necessarily dollar amounts or anything like that, but just generally, are things on schedule, or is there anything we should be paying attention to?
No, I would say that, anything that is behind, in a lot of cases, it's because, we're waiting because it may be a bridge or something related to a road that's related to permits from other levels of government. And so a lot of times that's what holds us up. So I wouldn't say that anything is majorly behind, and from our standpoint, from a financial standpoint, the thing that we get most concerned about is if we've already bonded the money and it's behind, then that's not a huge problem, but something that we get concerned about. The rest of it is it's an operational concern. And we like to know whether or not there's a major backlog. But I don't know of anything that is that is way behind that I would report on.
Okay, thank you, Mr. Schmidt. And just as a point of information for the board, I think maybe it was Mr. Walsh or someone brought up our waterfall and all the looming capital projects we have before us. We did, we're actually wrapping up pretty quickly tonight, who knew? But we did, Mr. Schmidt did, and I did speak, and I know this was something the board wanted, was to review the updated waterfall. So we will be doing that. The other thing that I think is relevant to all of this surplus money we're putting away, we also have some money still sitting in debt service from last year. So one of the things that we'd like to have the administration come back to the board with is a full summary of all of the money that's been put away to date from these various surpluses since, I think, 2019. Those have been allocated to remediation, to Penfield, what's been used, what's remaining. And out of what's remaining, what are the potential risks in front of us? So it's been about a year since we have had that update, but talked a little about Penfield. As I understand it, the 40 sites are almost done. We have the aggregate fill pile, which is a big one, and there's also a notice of violation on the WPCA. So that'll be I think, an important topic to come back to the board with. That may inform the waterfall and is relevant to this surplus discussion whenever that comes back before us. So if anyone has any questions or wants any details on that, just reach out. But that hopefully will get on our December or January agenda. Questions? All right. All right, so we'll move to item 13 to hear, consider, and act upon any communications. Jared.
Just one thing related to the conversation about surplus. I'm gonna stall a little bit here and wait for Mr. Walsh to get back. We spend an inordinate amount of time trying to really get the surplus and get the fund balance to a level that is really pinpointed to whether it's 11.75, 11.76, or 11, 10, 12, whatever. It takes a lot of time to really pin that amount down. And so I guess I would suggest that the subcommittee get together and just take another look at it and see if there's another way to define it and to define what the requirement is, and really to focus on like why is it at why is there a hold harmless, and what are we looking to achieve? Mr. Walsh, you missed the, under the other communication, we started talking about fund balance and surplus, and I'm making a suggestion that the board and that the subcommittee take another look at the policy, because we spent a lot of time in the administration, really trying to hit that pinpoint amount so that we don't, exceed the hold harmless amount, or violate the hold harmless amount. And so my suggestion is that the subcommittee get together and talk about what the goal is, because, and I'm happy to have Matt Sprindle come in and talk to the subcommittee and to the board again about what, the importance of it and what the thresholds are, and whether or not it needs to be 11, 10, 9, 12, whatever the amount is and what matters. But, in my mind, as I look at it, it seems like what the rating agencies might care about is whether or not, did you take money out of the fund balance? Were there dollars taken out of the fund balance? And that's where they would question it. If the percentage comes down, unless it drops to a very low amount, and again, I would have Matt Sprindle talk to you guys about that and what that low amount is, what that threshold might be. But we like I said, we spend a lot of time trying to get that into a very small window. I think to myself, as we're doing it, to what end? Why are we doing this? Whether it's 11 or 11.5, it's not going to affect our AAA rating. And so why do we do that? And so I throw that out there. If the subcommittee wants to entertain that and take another look at it and think about what the purpose of it is, what the purpose of the hold harmless is, and what are we trying to achieve by doing that?
Well, I'll tell you what the genesis of the hold harmless was, because I was there. The genesis of the hold harmless was under the Flato administration. Ken Flato had told this entire town and this board numerous times, oh, we can go below 5, we can go below 6, because he was taking money out, taking surplus money, and he was budgeting surplus money. He was budgeting to spend our surplus to try to have lower tax returns, tax rates, in order to try to get reelected. That's what it was. And it had finally gone down to 4.6, 4.7%. And guess what? We got a negative outlook. And then when we asked Matt Spurndell, who was here during that time, I believe, I don't want to speak for Matt, because I don't remember exactly what he said. But all of a sudden then when Ken's now out of office and we ask what's wrong? Why because your fund balance is so low. Well, what should it be? Matt's answer was a hell of a lot higher than it is right now. Now, those were days when we had internal service fund that had the teachers' health insurance in it. And for a while, it was the town's health insurance that was driving big negative losses. The Board of Eds was perfectly fine. However, there became a year or two when the Board of Ed took huge hits because of the number of their employees it was. And theirs now all of a sudden hit because we were self-insuring for both. And all hell broke loose. So this board started creating a policy. And when you start reading policies from around the country, from the GFOA, they have books on it. You probably have that blue book right in your office about what fund balances should be. They would actually suggest that on AAA communities, it should be around 15%. I've read 20 articles on this, and recent articles, and it's not changing. And they suggest that if you are along the coast and that you potentially could get hit by a hurricane or something like that, I don't know, something that happened not too long ago in this town, that it should be actually higher than that. So this isn't like numbers that this board picked out of thin air. Matter of fact, when we started looking at it, we were like the lowest fund balance of all AAA communities in the state of Connecticut, other than Greenwich, which at that time had zero debt. They have very minimal debt now, but they had zero debt. When they wanted to build a school, it's like, here's your $40 million check right out of their funds, right out of their bank account.
They used to put money in a capital projects fund.
Yeah.
They have savings account effectively.
Yeah,
Kind of like what we're doing with our surpluses.
Yeah, they also have a better tax base than we do, more commercial tax base. But no one looked at Greenwich sideways because they needed to, something like a hurricane came by or whatever, they had no debt. They could take out $100 million. It wouldn't have affected them one iota. So as we gradually moved up, the whole thought was, we're not going in the opposite direction. So how are we going to fund it and not have it start going in the opposite direction? Now, I hear what you're saying though tonight. I do hear what you're saying, but what's the correct number? Because this board now has got to the opposite position. Many of us who were on it, who were on the board, slowly eked that up, and we put full surpluses in there. If we just let everything fall to surplus, we'd probably be at 17%, 18%, something like that, too high. The goal was never to be in the top tier of the AAAs, but maybe, just maybe, we should be closer to the middle. Just close, not even like we're not even there now. We're not even right at the middle right now. We are maybe 1 or 2 away from the median. But It's always worth looking at. We haven't, the fund balance committee never met during.
I'm going to volunteer to be on the fund balance committee this year. I think. Mr. Walsh, I really appreciate that history. Mr. Schmidt, I also, I think all these policies should be revisited. I am interested in why it's so complicated to figure the number out, and why we can't make that easier, because it doesn't seem like it should be, but I'm not the one doing the work, so I take you at your word, but feels like it shouldn't be, feels like maybe there's a better way. I don't know, maybe that's a Mr. Centofanti question too.
Yeah, so I mean, in this case, today we had to draft language that was,
Yeah.
that was tailored and catered to that amount.
Yeah.
And if it fell to 11.25 or 11.5, are we gonna lose our AAA rating?
No, of course not. I think Jim made a different point. Jim's point was
Right.
we had a history of taking money out of it. And that's what you described, and that's different than letting it, and if it's in a range and it fluctuates a couple points, I mean, nothing's gonna happen. But I think the policy itself, and how it works is it's always good to dust those things off, revisit, and re-benchmark. And we do have Matt in here typically every February, so we'll have an opportunity to talk to him again. I do think that, it's good to do that, to talk to him about our, bonding capacity, about, the WPCA, because, they're going to have a bunch of stuff, how all that should fit together, what information the board should have. So I think it's a good suggestion to make sure that that committee meets and looks at it, and we'll see where it comes out. Mr. Curley?
Yeah, I don't want to speak for you, Mr. Schmidt, but I do think that I don't think you were suggesting that we use the 11.75 that we have and lower that. I think everyone in this board, including our CFO, understands the importance of the health of that reserve. But I do think that operationally, if you're having a hard time and your staff's having a hard time, that I think to the extent that we can give you a range that you can hit to make it easier, I think it's important that we're not drawing down on it, but because our budget is growing year over year, we have to contribute to the fund balance in order to maintain a percentage. And I think as long as we're trying to stay within, 5 basis points of the number, I think that's probably the wiggle room that would give you some operational flexibility.
Yeah, exactly. And I think, and Jim, you talked about it too, Mr. Walsh, that, there are a couple of different issues here, and you were talking about the amount that we put in there and whether it should be 15% and getting us to the middle of the pack. And, if that's where we want to go, that's where you decide to go. But it's more about, to your point, that, giving us a little flexibility in that range. So we're not having to hit a pinpoint yet.
But I couldn't help but note when I was looking at the 7.25 or 11.75 or 11.76, that 1 basis point is $35,000. So 5 basis points is, well over 100,000, and that can make the difference on some of the projects that these departments want to do something or other. So I think we do have to be careful not to just throw money in there, put another 5 basis points in there to be safe. It should be a conscious decision to contribute to it. And I think we all are trying to grow that number when we can, but I think we have to be careful not to round up too often. So.
Thank you. Mr. Walsh? And then
Mr. Mottola, if you want to go first, I've already spoken, so you haven't
I think he
spoken.
wants to go home.
Okay.
No, I'm not throwing anything. No. What I wanted to say was, I think it's important to look at this again, Fund Balance Committee. I want the committee to look at the scenario. What happens if we wanted to take some money out of this fund balance? Because remember during COVID, when we were going through the budget process, and other municipalities were taking some money out of their fund balance. And we got a load of expenses coming on down the line. So I think the question we should ask our experts and people we deal with, what if we wanted to take $2 or $3 million out of the fund balance to help pay for some of these projects? How does that affect our, AAA status if it does? With an understanding that we're going to have to build that back up again. So
No, I understand.
That's important to me to
No,
look at that.
I understand. I guess we should ask for examples of that. I do know,
Absolutely.
was it West Hartford? I think it might have been West Hartford had get hit with a windstorm, ice storm. It was an ice storm, and it took down hundreds, if not thousands, of trees. And they had a healthy, they were like right in the middle of the pack, and they took a number of $1 million out, and then they got a negative outlook for taking the money out.
Yeah, I want to see
the next year. Like what is, maybe Matt can give us guidance on it about, he can talk to the credit markets and try to figure that out, but.
And I think we have to understand what that means. So you get a negative outlook, but you're not really downgraded, and it's a one-time thing, and you put money back. These are scenarios which we should discuss, because, we got $40 million there. It happens to be earning some interest now. For many years, it didn't. And we've never taken money. We had Hurricane Sandy, we had COVID, we had Madoff, we had a lot of things happen. This town's never touched that money. There's been a lot of discipline around it. The board has changed over time, and, people who have been through all those events are no longer on the board. And so I think having the discussion is good, and just kind of understanding the history is good, having the discussion is good, looking at the policy is good. But I appreciate, the perspective, because I think it's, it's important to have it there. But at the same time, I think we all feel the same way. Once it goes in, it never comes out. So last year when we ended up, with accounting entries and inadvertently threw another $1 million in there or something. I'm with Craig. I hate to see that happen, because, we do have a lot of needs, and we worry about how much we bond, and.
I agree.
So that's.
I'm not looking to increase it personally.
Yeah, I hear you.
Because it gets increased every year based on how big the budget's, how large the budget's growing.
Yeah.
So that's always some money. That's always some tax dollars. So I'm not looking to, like I said, lead the pack on fund balance within AAAs. One thing you just mentioned is, one thing that always scares me is, okay, we take $3 million out, and, it's not a lot of money, but you take it out. And then you just don't know what you're going to get hit with. And, these things always work the worst way. It's like, we take $3 million out, which, to me, if we can't afford $3 million for bonding, we got a problem. We have a bigger financial problem. Like, if we're riding the right razor's edge, or we need to go into the piggy bank, that emergency piggy bank, to take a couple of bucks out of it, we got a lot bigger problems.
And that's probably why it looks negative.
Yeah.
Honestly.
Yeah.
So, and that's where you get to Jared's point, and the hold no harm. You're probably better off not, putting in than taking out, so.
I would rather fund less of it and
Yeah.
have it go down gradually, if that's what people wanted to do. Because I think what that looks like to credit markets is, they didn't even need to do that, but they rated it. So what are they going to rate it for next?
Yeah.
And what happens if something happens? Then it's going to even be lower.
Yep, agreed.
So
Yep, Ms. Leclerc.
I want to make the point that I think you're looking at it wrong, is that this is about cash flow. And our fund balance was a success story during COVID, when we didn't have to pay in taxes right away as we normally did. We didn't have to dip into our pockets. We had that cash available to keep the town going. We didn't even blink. Other towns had to go borrow money or take money out to pay for services and to keep themselves running. So
Because we had the tax deferral.
Be-
And we weren't collecting taxes, and so we had money in the bank because of our fund balance. Yes, agreed.
And so I think that's very important for people to understand, that it's really a cash flow mechanism, so that as our budget grows, our fund balance always has to grow with it, because as that shrinks, that hurts our cash flow, and we have less money to lean on.
Thank you. All right, well, sounds like we need a more fulsome discussion. So I know everybody's going to have their hands up for the fund. There's going to be 9 of us on the fund balance committee, it sounds like next time. All right. Maybe 8. All right. So can we move to item 14 to adjourn? I'll make a motion to adjourn. Seconded, Mr. Walsh. Thank you, everyone. Good night.
Thank you.
Happy Thanksgiving, everyone.